Welcome to the channel. Let us talk about crypto arbitrage and how to use the platform called PARPRIKAB to trade cryptocurrency using the arbitrage investment strategy. And you could earn say up to $1,000 daily if implemented properly. More to discover and learn in this episode, so stay tuned. Grab a cup of tea and then subscribe. Right. So what is arbitrage and how does it works? Stay tuned. Let me break it down in simple terms. You see, arbitrage is the process of simultaneously buying and selling a financial instrument, e.g. Bitcoin, Ethereum, Chainlink, etc. on a different markets to make a profit from an imbalanced price. And the strategy is very simple. Examine the difference in the price of the same financial instrument in different markets. Buy the instrument on the market with lower price. Say, for instance, you buy Bitcoin from Coinbase at 49,900 and simultaneously sell it on the other market, which beats a higher price for the traded instrument, say on Binance for 49,954. You make $54. Essentially, arbitrage takes advantage of the inevitable inefficiency in the market. And to inform you, arbitrage often creates an opportunity for a risk-free profit for us, we traders. Okay, the question I think you like to ask is, what's the cause of this price difference? Stay with me. Well, you see, since the birth of Bitcoin in 2009, we now have over 7,000 cryptocurrencies in 2021, all over various platforms, creating an imbalance in supply and demand, thus creating different prices among various exchanges. Consequently, this factor creates opportunity for crypto arbitrage. I think you got the picture. Meanwhile, let me explain this. What I just described is what is called crypto arbitrage because it's all about cryptocurrency. However, the term arbitrage trading covers several spectrums like stocks, commodities, currency, and even bonds. Okay, stay with me. Let me quickly give you an overview of the various arbitrage and how they function. Stay with me. Let us look at the pure arbitrage. How does it work? Simple. If and when a large multinational company may, for instance, list its stocks on multiple exchanges, such as New York Stock Exchange and London Stock Exchange, whenever an asset is traded in multiple markets, the price is very much likely to fall out of sync, creating different prices. Consequently, arbitrage becomes inevitable. Okay, let me break it down. Let me use another example. Let's say a stock of a company AB trades at $40 on the London Stock Exchange, and let's say I find the same stock and it's now trading at $40.80 at the New York Stock Exchange. The trader, that is me now, could simply buy the stock at LSE and sell it at New York for a profit of 80 pence per stock. You got the picture? Okay, here is the key. Listen to this. Since I will not be the only person who spotted the price difference, and if you would like to know, hedge funds managers and sophisticated arbitrage software will probably be in the trade immediately as they spot the difference. Therefore, the increased demand for the lower price stock would push its price higher in London, and similarly, increase the supply in New York would push the price of the higher price stock down. And right now, let us examine the Triangle Arbitrage. And this strategy can be implemented within the crypto as well as the currency world. Okay, now let us examine it with the currency, I mean the fiat currency money, fiat money rather. In this case, the trader converts one currency into another at one bank, converts that second currency to another at a second bank, and finally converts the third currencies back to the original currency at the third bank. Not clear? Don't worry, I got your back. Let me break it down. Let me use this example I spotted earlier. Now, what do we have here? And let's say you want to begin with $2 million. And please take note of this. The euro to US rate, exchange rate is 0.894. Don't forget this. Let's look at euro to British pound is 1.276, and USD to British pound is 1.432. Please, this is essential. Take note of this. First, if you want to do the triangle arbitrage, you convert the $2 million to euros at 0.894 rate, meaning you multiply this 0.894 with the 2 million, which is going to give us 1,788,000. Next, you take the 1,788,000 euros and convert them to British pound at, look at the exchange rate again, 1.276. Now, this will give you, when you convert it, will give you 1,401,254 pounds. Let me break it down. What you want to do is, you want to divide this figure 1.276 by this 1.276, which is the rate, by 1,788,000. When you divide this, it's going to give you 1,401,254 pounds. Next, you will take the pounds and convert them to US dollars. Look at the rate, 1.432. How do you get this figure? You multiply now 1.432 with this initial figure, 1,401,254. What do you get? You're going to get over 2 million. You're going to get 2,006,596. So subtract this from the original figure, I mean the 2 million. You will left with a profit of $6,596. You got the picture? Okay. Now, let us quickly look at the, well, before I move on, this figure here, I mean this exchange rate, is what was given when this was published. If you go here, as you can see, the exchange rate is different now. US dollar, I mean from euro to US dollar is now 0.866. If you want to do it, you will have to use the recent exchange rate. Okay, now let us look at another arbitrage, which is the risk arbitrage. This type of arbitrage is called merge arbitrage, and it involves the buying of stocks in the process of a merge and acquisition. Risk arbitrage is a popular strategy among hedge funds, which buy the target stock and short sell the stock of the acquirer. And the next one is what I find very interesting. Perhaps you and I have done this without knowing, which is the retail arbitrage rather. How does it work? You see, this strategy is very simple. You buy several products at a cheaper price from company A in China, and then you sell them, for instance, on eBay at a much higher price. Let us look at convertible bond arbitrage. It is a form of arbitrage related to convertible bonds, and also called convertible note or convertible debt. It is a form of corporate debt that yields interest payment to the bond holder. So perhaps you would like to know the difference between convertible bonds and traditional bonds. No worries, I got your back. You see, with a convertible bond, the bondholder has the option to convert it into shares of the underlying company at a later date, often at a discounted rate, whereas this is not possible with the other bond. Okay, company issues convertible bond because doing so allows them to offer lower interest rates. Let us look at the negative arbitrage. Negative arbitrage refers to the opportunity loss when the interest rate that a borrower pays on its debt that is a bond issuer, for example, is higher than the interest rate at which those funds are invested. That said, let us look at the topic of the day. Arbitrage, crypto arbitrage, and let us examine the simple arbitrage. Simple arbitrage, well, where you buy cheap from one platform, say for instance, now we are looking at the crypto arbitrage. Just bear with me. Well, what am I trying to say? I'm going to give you an example now. Say you sell one where you buy from one platform, say Coinbase, and sell simultaneously into another platform. I've stated that before. I'm using another example to break it down at a higher price. Now look at what you have on your screen now. Now, okay, you see this example on the screen. Look at what you have. You have 40. Let's say the price now is 40,000. I hope it's going to come up. $40,000. Yes. Now you buy it at Coinbase for $40,000 and sell it at 40,500. You got the point. Now, how do you make money? Please note, I'm talking about, it looks similar, but I'm talking about crypto arbitrage now. How you make interest. Now you see $40,000. You sell it at 40,500 at Binance platform. Let's assume you bought 40. Okay. Now you would realize $20,000. You get the point? Because you made 500. Multiply 500 by 40 is going to give you $20,000. You see what I'm talking about? Remember, I said you could also carry out triangular arbitrage. Yes, with crypto, just like you will with fiat money. Example, for instance, you could pair BTC with Ethereum, BTC with Solana, Solana with ETC. In this case, you are essentially taking advantage of the price difference between these coins. Well, it could be a bit complicated when in doubt on how to go about it. Just look at the concept of the currency I mentioned earlier about the currency arbitrage triangle. Meanwhile, arbitrage is not as simple, yes, as it appears. There are risks and uncertainties embedded in it. Perhaps you want me to explain what I mean. Okay, you see, as technology evolves, trading in general has become digitalized. These loopholes or error, if you like, are now being spotted and resolved quickly by software. Similarly, listen to this. Creative minds continue to emerge and start to create crypto arbitrage software to help you and me. This is where PARPRIKAB steps in. What you are looking on my screen now. Yes. Now, so how does it work? Let me tell you how it works. You see, they say however, if you register with them, look at how it works. Scouting among multiple exchanges, we distinguish the low price to buy BTC. So what they're telling you is their software can quickly be able to transfer it to another more expensive vendor. You can buy it, buy at lower price, sell at higher price, pocket the difference. That's what they are telling you essentially here with the aid of this software. Simple. Arbitrage PARPRIKAB will provide a simple and straightforward way to understand arbitrage quickly and get ahead of it. Now, this is what I find very interesting. They say with SRP and SLM, there's fast execution, meaning they are already using this blockchain technology. They're telling you to execute this process. It's not going to be difficult. There's fast execution using these two technology, SRP and SLM. SLM is the Stellar Lumen. SRP, I think, is Ripple. Great. Time efficiency, both movement. Now, this is what I find very interesting with this technology. Well, let me quickly say this. I am not financially incentivized by this company to do this video on their behalf. No, sir. No, ma. Well, let me tell you about the risk here. There are risks involved in using some of this, and what are the setbacks. We have the fees to pay, definitely, and withdrawal fees as well. However, this is what I find very interesting. Using Stellar Lumen, which is the SRP, you get what I said? Or Stellar Lumen is SL. Where is it? Let me show you. Stellar Lumen is SLM. The Ripple is SRP. If you are using them to trade, when it comes to transaction fees, it will be reduced. You know how they work, 0.0001. Let me tell you this. However, there are other hidden fees attached to this platform. All you need to do is to click on Get Started Now. I'm going to show another video to show you how it really works. Now, I strongly advise this. Do not invest the money you cannot afford to lose. Well, I hope this video is very helpful. I'd like to hear your comment on the subject matter. Okay, here comes the best part. Subscribe, like, and comment. Remember, the goal is to generate wealth, build companies, and then create jobs. Bye now. See you soon.